Hey everybody, and welcome back to the Wilton Report, Princeton and Greater Princeton's only video and podcast on everything real estate. Today, you're in for a treat because I'm going to open the vault a little bit and I'm going to show you some of the strategies that I use to help our customers. And again, for context, myself and my team were the #1 agents in Princeton. So we're going to give you a little bit of a glimpse as to what we do, one of the key factors we use to analyze data. Of course, we're going to do the market review. And we're going to cover the pending rate cut. So stay tuned to today's episode. If you haven't subscribed, great day to do so because I'm going to be sharing some secrets with you over the next few episodes. Welcome back to the Wilton Report. As always, I'm Josh Wilton. I'm the co-owner of Queenston Realty. I run the Wilton Group, which is the #1 sales team here in Princeton. We run Princeton Property Management Services, which is we manage properties, all the other good stuff. So anyway, we are in the dog days of summer. It's the last week of August. We are literally walking into Labor Day weekend. So as you can imagine, there's a lot of out of office reply emails happening right now, which is great. Hopefully people get some days off. We do have some big news on the horizon for the real estate market. The biggest one is the pending jobs report for August 2025. So as you recall, the July one was weak. However, the new report does come out. Hopefully it's not adulterated. Look for it. It's a big one. And, it will predicate the next big thing. And here's some data. Again, there was an increase in unemployment in July. So again, the previous 2 months were, revised downward, meaning the previous 2 months going into July were weaker than they thought based on, revised data. Because again, it's hard to crunch data on a national level in a week. So there's always revisions up or down as things go. So that being said, that report, I think, will help predicate what the Fed will do in September when they decide whether or not they're going to ease rates. The market, I think, has already priced the rate cut in. Trades have been trending down to a 30-year low. The 30-year mortgage is at its lowest level in 10 months. So where it's about 6.5-ish. There's definitely products in the 15 years, mortgages, ARMs, et cetera, et cetera. So there's definitely stuff with 5s in front of it, but the benchmark, the 30 years, it's 6.5, 6 and 5/8, something like that. So, we'll see what the Fed does. I think the jobs report is not going to be good. So we'll see what happens in the next month. It's going to be a big month for the markets because it's going to give an indication as to not only the short-term play for the Fed with rates, but I think the near-term play, and I do think we're going to see some easing on rate because I don't think the national jobs picture is all that rosy. So we'll get into that another day. Let's take a look at inventory. We're going to look at things a little bit differently today in terms of what's happening in the market. So if you're on Realtor.com or Zillow or any portal, or if you're working with a broker, if you're working with my team, you know that inventory is lean to non-existent. And it's supposed to be low this time of year. We're through the spring surge. People are going away on holiday. They're not thinking about putting their house on the market. They've seen some good stuff come this week. Buyers are on holiday. I sent a new listing to a customer. He's like, oh, it looks awesome, but I'm in Italy. So, it is what it is, right? So today we're looking at the market from a little bit of a different perspective. So we're going to look at the number of actives by town, and then we're going to look at what percentage of those actives have been on the market over 30 days. That's how we're going to look at today's inventory review because, as you know, inventory is everything. So Princeton, 54 actives, which is really low. Last week, we were in the 44 range, so we're up a little bit, which is good. Percentage of the 54 on the market over 30 days, 75%. So just let that sink in, right? 75% of the standing inventory in Princeton's been on the market over 30 days. We'll get to what that means later. West Windsor, 51 actives, only 54% over 30 days, which is, I would say probably normal. So we're, like I said in the last few episodes, we're coming back into a normal market. Plainsboro, 51 actives, 50% over 30 days. Lawrenceville, 51 actives, 79% over 30 days. So it's something to watch. So anybody looking to sell or buy in Lawrenceville, we'll talk about strategy in a minute, because strategy all of a sudden is going to matter. Skill will matter. Understanding the market will matter. Working with a broker who does more than fun Instagram videos actually will matter. So fundamentals will matter again. So 79% of the actives in Lawrenceville have been on the market over 30 days. Hopewell Township, 60%. And Hopewell Township and Lawrenceville are in what I call the outer ring, right? So the market tends to soften there first. Why? Lawrenceville has no train station. Hopewell has no train station. When you don't have a train station, you're removed from a job center. This gig, this real estate world we live in, as one of my associates said, the largest spectator sport in the world is real estate. It's all predicated on jobs, which is why the jobs report is a big one. It's a huge one for the market. So 60% in Hopewell, 79% in Lawrenceville. So we'll see how that tracks. Princeton is just ridiculous because, there's a lot of expensive real estate. So what does this mean? So again, I don't think you have to be a PhD economist to understand what this means. And here's what it means. The stuff that's been on the market over 30 days, you're going to start to see price improvements, price reductions, if you will. Why? If the seller's motivated to sell, the available buyer pool already came through the house. That's it. It's not like they're going to manufacture more buyers September 1st, right? So right now, like the people that were looking to buy at your price point in Lawrenceville, Hopewell, whatever, they've already seen the house. They've seen it online. They've come to open houses. They've worked with a broker, whatever. And they made the decision that at the price you put the house on at the market doesn't make sense to them. It could be for a variety of reasons. I think the biggest one is that prices have gotten to the point where wages have not kept up. Jobs, right? So jobs is the key deal to this whole thing. So what does this mean? If your house has been on the market over 30 days, you come out of Labor Day weekend, the kids go back to school, whatever. What are you going to do? You're going to maintain your price. You're going to increase your price. And again, we did look at, there's a lot of sellers in West Windsor who did that last week. West Windsor remains scorchingly hot market. So you're going to start to see price improvements, which we see every end of summer and fall. This is not the sky's falling type of thing. It's just that the spring market's over. We'll see the fall surge, but we're going to see some inventory pick up this fall as well as rates start to ease off. So the people that came on in like that July, June market didn't sell. They have a choice to make, right? And they can either lower the price or they can probably take their house off the market because the price they're at, they're not going to sell, statistically speaking. And you're seeing this nationally. Nationally, there is a large number of sellers just taking their house off the market. We're not in that situation. We don't have like a glut of inventory. We actually have none. But what happens is at the end of the spring market, sellers or their brokers overshoot what they think the value of the market is. They get caught, right? And here we are in the dog days of summer. So again, what does this mean? It means strategy matters. So we're going to talk about some of the strategies myself and my team use, the Wilton Group here at Queenston Realty, to kind of break through the noise, because there's a lot of noise in the market. So you have to make offers based on fact, based on data, right? And again, the market doesn't care what you think. The market doesn't have any emotion. It doesn't care about your emotion, doesn't care about your thoughts. It doesn't care that your kids were born in the house, that your grandfather painted that wall. The market doesn't care. What does it care about? Numbers. And how you interpret the numbers means everything. So you have to make offers based on data, and you have to list your price appropriately based on data. There's other strategies involved in listing, but those are big ones. So this is literally an email, right? We're negotiating a house that came on the market in Pennington, right? So, and this is a response to a response to a response. Like this is 4 or 5 rounds of negotiation. So this is a level of detail we get into, right? So we said, look, 212 Penview home is priced at $324 a square foot, right? The best comp sold at $358 a square foot. The issue for 212 Penview Road is that it's going to take $150,000, $200,000 to get it to the $358 value. Now, the buyer in this particular instance is a contingent buyer, so they're going to be a little more aggressive. And by the way, and we said this isn't a criticism. Here's the numbers. One of the two garage doors is bowed out, appears to be non-functional. Replace section of the rotted drop ceiling in the basement. Like, these are things. So they put their house on the market at $324 a square foot, thinking, well, we're still below the market. No. They have to repaint the rooms. They have to refinish the wood floors. They have to update the bathrooms, which were built in 1970. So the septic's old, the water softener's old. So there's so much work that has to go into this house to get it to that $358 a square foot, which is where the market's at. So the seller overshot it, right? And the broker, God bless them, is defending their number, but they don't have any other offers. So guess what? You have to be smart when you make your offers. Here's another one, right? So this is a counter to a counter, I think, where the house came on at 1.5 and change. This is our counter. So we started below this at 1.325. And again, we said, look at the pricing analysis that we attached, because you have to understand the market, right? And the seller on this particular house, is saying, I think it's worth. Nobody cares what anybody thinks. So again, the comparable houses on this street, right, are at $406 a square foot. The subject property is listed for $474. So what does that mean? Like, just, you're an economist now, right? What does that mean? It means you're overpriced. It means you're overpriced. It means you're not going to sell unless you get to the market numbers. And price per square foot is one of the main market numbers you have to look at. It's not the only one. There's a lot of them. There's 9 of them, to be precise. So here's how it looks on paper, right? So again, the subject property is at $474 a square foot. The market average for price per square foot is at $406. What does that tell you? 510 Rosedale Road, $358 a square foot, right? 360 Rosedale Road, $412 a square foot. The subject property is at $474. Another one, Rosedale Road, $389 a square foot. The subject property is at $474. So if you're a seller and you're employing this tactic of aspirational pricing, I'll wait and I'll negotiate, you're going to end up at these numbers. You're just going to take you longer. You're going to pay your mortgage. You're going to pay your taxes. You're going to deal with people coming through your house and that aggravation. It is aggravating, by the way, like it is your home. So I get it. But this is the deal. Like, this is how you have to look at pricing in the market that we're going into. Because if you overshoot it, right, the market's going to tell you it's not selling. Our job is to tell you why. If we're representing a buyer, this is what we do. If we're representing you as a seller, this is what we do. So there's 9 factors every buyer and seller need to know. Obviously, price per square foot is one of them. It's a good indicator. But there's 9 things you as a buyer and or a seller need to know in order to price their home successfully or make a successful bid and not overpay. And a lot of times buyers don't make bids because they don't know the math and they get stuck. So if you're in a market where in Lawrenceville, 70% of the market is over 30 days on the market, this is a dream time to just go out and start throwing some elbows around and making offers. However, right, buyers, and I think as a function, their agents don't know where to guide people. We literally tell you within $50 where we think something's going to sell. So again, that snippet that I just showed you on the previous slide is just a small piece of it. So we actually go through this with every customer, buyer and seller, and we say, look, there's 9 factors that will determine the price of your house. And if you think I'm going to show it to you here, I'm not. If you want to know what they are, you can text me at 609-773-8054, and you can have a buyer consultation. Or if you're a seller and thinking about selling your house, you can have a selling consultation, because this is 23 years and $2 billion in real estate brokered in this market. That's what this represents. So we look at this on every single bid. We look at this every time a house goes on the market that our team represents. So, there's a lot of thought and strategy that goes into it. So there's other things too, but that's sort of what I wanted to talk to you about today. If you're a buyer and you've been like, oh man, I'd buy that house, but I'd pay X. If your broker doesn't know how to get to X, you're working with the wrong broker. If you're a seller and your broker's not having these conversations with you and saying, look, you're pricing aspirationally based on emotion, and the market's telling you, that's wrong, but they don't have the data to support it, you're working with the wrong broker. Like, these things matter. Your strategy matters. Who you work with matters. Things I say all the time. So that's what's happening in the markets locally in Princeton in August, in Greater Princeton, Hopewell, etc. Any questions, obviously, always feel free to text me, 609-773-8054. If you have not, please subscribe to the podcast. It helps spread the message. And again, if you know anybody thinking of buying or selling, just share the podcast with them, have them take a look, or reach out to us and we can help them out. So that's it for this latest edition of the Wilton Report. Thanks, everybody.